Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Friday, August the 16th. The year's 2024. Let's talk trading. It's time for the weekly wrap-up. As always, these videos are for educational purposes only. Your results may differ from mine. And a reminder as we close out the week, risk management. Never have or never lose more than you're willing to lose on any one single trade. So let's go ahead and take a quick look at the weekly. And we can see that the pound yen was the only pair that did not fill the gap this week. The pound dollar has actually, it exceeded the 1.29 level today. It's pulled back now. We're 10 pips below. We're 130 pips above the weekly open, 24 off the weekly high, and 143 off the weekly low. So any of you buyers out there may have profited week on the pound. If we zoom out to the month, we are 37 pips above that, 24 off the high, and 226 off the low. Notice we are in the upper wick zone here of the pound dollar. And just to let you know, my internet's running a little slow today, so that's why the delay here on the charts. If we take a look at the opening range for the day, for the week, the month, and the year, you can see we broke out of that opening range for the week on Tuesday. We broke out of the opening range for the month on Tuesday, Wednesday, Thursday, and once again today, Friday. And we're about 27 pips above that. We may or may not close above the monthly opening range. And we're also above the opening range for the year by about 130 pips. So actually, feedback. Is anybody out there actually trading the opening ranges or using them maybe to gauge direction, strength, anything? For the year, 179 pips above the open, 154 off the high, 591 off the low. And once again this month we have crisscrossed that yearly open. We went down, looks like we just about hit that year midpoint and reversed. Inside bar traders were rewarded once again this week. Notice we broke out of the inside bar from 2 days ago, Wednesday. Yesterday we poked out of that range, but we closed within. Today we broke out of that range at the 128.68 mark, and we moved up. And notice there's really not that much inside bar action here happening on the dashboard. Today's looking at the ranges, we've got a bunch of pairs over 100 pips, most of them being the yen pairs. We got dollar yen down 107 pips off the open. And for the pound dollar, we're only in at 66 pips of range today. And if you look at the chart, it looks like between here and here, or somewhere it looks like a midpoint. Maybe we can look at that on the 3-level ZZ chart. Okay. Why did it do all of that? So we crisscrossed, or we broke through the buy zone here back in the Asian session. We really haven't looked back, though price is starting to drop once again. Rats, red rats, time to feast. Range is definitely large enough. You can see here at the smart rat, we're already 15 pips below. So once again, the smart rat indicator, it just basically looks at the, I believe the last 100 days, and it looks at the 20 percentile mark. So you can see here, we've tightened up those rat ranges by, let's see, on the top side by 9 pips, and on the bottom side by 5. and Bambino Flex indicator said go long today and it definitely did that. Bias at R1 was short, so that means the bias at R2 was short. You see we rejected off of R2 by about 25, and it doesn't look like we've taken out that pivot today. So we have taken out the H4 pivot. Let's take a look. No, we did. We missed the pivot down at 28.41 by 7 pips. So we got 2 open pivots now in the month of August. Wick zone, in and out of that upper wick zone. Once again, price just does not like staying in the wick zone, so it's something to be noted. Smart ranges for the week. 167 pips at the 58th percentile, so pretty much we've covered the last 3-week candle bodies here. I don't know if we're going to get that fourth one or not. We've got FOMC news coming out next Wednesday, so who knows what they're going to do and what that's going to do to price. Could push it up, could push it down. Let's see, high minus previous high, we broke out by 97 pips. Previous low minus low, we did not break out. So anybody trading the weekly, previous week's high-low breakout had a chance to make money. And for the rats on the weekly, 26 off the high now and 141 off the low. So looks like the green rats were definitely rewarded. Red rats are feasting today. For the weekly open crossover traders, 154 to the upside, but only 13 pips to the downside. Simple price action chart here. Okay, let's see. We've got an outside bar happened here. We just broke through that low. And once again, M30 candle, red at the double low, short. Be worth about 10 or 11 pips at the moment. Once again, just simple horizontal line with candle colors. Or price direction at the line. It doesn't get, I don't think it gets any simpler than that. I really don't. And I talked about that 3-ball. Let's just take a quick look at the daily. Yes, I was, let's see, where do we have it? Where is that midpoint? Actually, yeah, we bounced from here. Oh, it's taking a 3-ball all the way back down there. That wasn't a 3-ball. Let's see, let's look at it from H4 standpoint. We almost moved back. Let's see, from here to here. That was a nice move. Let's see, we've got the 3 balls right here. H1. 3 balls way down here. So 128.56 is that 50% retrace area. We'll see what happens if it can actually do it. Here we're just, on this particular chart, we've got the fibs for retraces. We've got the 3 balls for support and resistance areas. And we're looking at those lower highs and higher lows for triggers. And you can see right here, there was a trigger long at 882. There was a trigger short here at 2906. And looks like that must have been the news gap down. Okay, let's see. 249 range by month. We did not push the range. So year-to-date accumulated is the same. So nothing to write home about. And it is summer, so who knows? Things could still stay. Well, for those with this wanted that squiggly, like I said, it's kind of interesting looking at this because once again, the horizontal lines usually went out, but I stuck the imbalance on there because I just noticed how price likes to come back to those imbalance areas. A lot of times you'll see return bars, especially if you look at M30. You can see right here we got this imbalance, and price looks like it wants to come back here. Just like price ran up to this level, didn't quite take it out, and then pushed out. But as I mentioned, somebody was asking me about squiggly lines, so I indulged them. And hopefully I answered that trader's question. So let me know if you're still watching. And on the higher wick zone, lower wick zone, trading, once again, price did not get back in that level. You can see we're trying to crawl our way out of this area here. And to see if we can get a turnaround. And these are the previous candles midpoints. One of my oldies but goodie favorite. Use it for targets, use it for entries, use it for direction. And as mentioned, I've been working on some new 2024 indicators, that DOL, or found out that's called draw on liquidity, that a trader had sent to me, wanted me to implement it in some fashion. So I haven't heard back from them to see if I did it right or not, or did it what they wanted. And we'll just have to wait and see what they say. So we're looking at the trade reminder. We're inside that upper monthly wick zone, and the month is turning up. And looks like so far this month's an inside bar with the lower high, higher low. Buyers are in control. We drop down to the weekly. Okay, we're above the previous week's upper wick zone. Actually, bar 2, we're just about in that wick zone there. Previous range exceeded by 15 pips. Buyer strong control. Above the previous mid on the weekly and above the pivot point. And dropping all the way down to the daily, you can see where the pivot points are. We're above that upper wick zone, daily upper wick zone. The previous day was an outside bar, giving a clue to take a breakout trade. Buyers are in strong control. So a lot of these things, trading, it seems you can always go back to the basics. One or two simple basics, pivot fading, or previous day, week, month breakouts, weekly open, daily open, monthly open crossovers, previous bars, midpoint. You can pick, one or two of those, or just one, or just simply trade horizontal lines, evenly spaced, because people try to make this trading game so much more complex than it has to. And the complexity really all is within your head, because, we're looking at charts, but charts are just reflecting what price has done and is doing. And we sometimes just forget about that. We get so wrapped up in the analysis. So sometimes you just have to just step back from the analysis, keep it simple, and trade what you see, because it's not what you trade, it's how you trade it. So go out there and drain the banks. I just want to wish you all a fun and safe weekend. This is TheRumpledOne, over and out.